Hey, John Stevenson here, the Guaranteed Retirement Guy. Today, I want to talk to you a little bit about index terms like participation rates of the index, maybe caps, spreads. There's so much to think about when purchasing an annuity. So, when you think about an index, maybe it's tied to the S&P index. You might be considering an annuity that has a lot of growth and they have really high participation rates and they have really high caps. And you're wondering, how do these work? And do they change? And can I count on this type of growth that this agent is illustrating? So I'm going to go back to my book. Okay. If you check out my book, Guaranteed Retirement, it's actually was a bestseller earlier this year, and I do talk about this. I have about 3 or 4 pages just kind of dedicated to these terms. And when we look at these, just different ways of looking at these annuity contracts, it's really important to know how it works. And so, one of the things I talk about in here is a cap rate or a cap. What is that? Okay, well, let's say you have an index that's tied to the S&P or Barclays or some Fidelity index, okay? Doesn't matter. And let's say the cap is 7%, okay? What if that index, what if we have a gangbusters year and it earns 10%? If it earns 10% and your cap is 7, well, you're capped at 7%. That is exactly how much is going to go in your account. If the cap is 10%, you're going to get 10%. If there's no cap, then you'll earn whatever that index makes. And it's 20%, you'll make 20%. Okay. All right. So if you go to page 105, I talk about participation rates. What is a participation rate in an index? Well, it's just that. It's basically how much the insurance company allows you to participate in that index's growth. So what that means is if I had my money in Credit Suisse, let's say, and I have a participation rate of 65%, that means that if the index does 10%, they're going to allow me to participate in 65% of that index earning during that period, which is 6.5%. That's how much that will be credited to my account's value. Now, on the flip side, if I have an index where I have a participation rate of 200%, that's not bad. Now, instead of getting 10% that the index made, I'm getting 20%. Now, how do they do this, right? Like, how can you make 20% when it only makes 10%? It's just because the insurance company they're able to purchase call options associated with a certain index at a very reduced rate. And so because of that, when the index rises and they exercise those options associated with that index, they're able to realize a large profit, and so are you. Okay. And so that's why that works out very, very well. Now, just beware that some of these participation rates will reset every single year. So maybe one year it's 200%, another year it might be 150 or 100%. So you have to think about this when you participate in these. You have to realize that they do change these things up. And so you have to look at the fine print, look at the terms and conditions, look how long this is guaranteed for, and talk to an advisor like me that can tell you the ins and outs of each of these carriers, the indexes, how long of a track record they have. Because if you're looking for a carrier that has a long history of keeping participation rates high and also zero caps, that might be something to know about. Okay. I have access to everything. And I'd be happy to share it with you. Just give me a call, or if you'd like to book a call on my calendar. You'll notice that there is a link below this video, and we'll talk about it. We'll talk about the different cap rates, the different participation rates, how the indexes work, what kind of growth you can expect. If you're looking for market protection, they provide the market protection. So that's already a done deal. Your money's protected from market risk. But if you're looking for maximum amount of growth, okay, there are certain annuities with certain companies that work the best over others. Now, if you're looking for income, there are sometimes annuities that are not great for growth, but are phenomenal for income. Okay. And the ROI is huge for that. So it just depends on what your goals are. And of course, I can help you with that. And if you want to kind of read more, order my book. I'd be happy to send it to you. So again, book a call. You'll see a link down below this video, and I look forward to chatting with you soon.